Hey, Tim Kerley here with your Friday FAQ. Mortgage rates are up, so I wanted to make you aware of that, and because we've had some pretty significant changes. And secondly, I wanted us to kind of look and just see, what does this mean for our buyers? What kind of a difference is it going to make for our buyers? Well, first of all, let me say, it seems like the prediction is always that mortgage rates are going to go up every year at the beginning of the year. Well, this time mortgage rates have gone up, and they've gone up a good bit more than we had anticipated and way faster than anybody anticipated. Let me just show you, let me share my screen with you here. So, whoops, that's the wrong screen. Let's look at this screen. So this is a comparison. If you go back, let's say even back in the fall, October, November, for someone who had really good credit, a 30-year fixed rate, 20% down, here's what it might have looked like about, a 3.125 rate. Let me highlight these rates. And here's what we're looking at now. Same scenario these days, or today, 4.125. So you're about probably, in most cases, 3/4 to a full point higher in the rate than we were just 2 or 3 months ago. So that's been a really rapid increase in rates. Now, let me just say too, what I'm showing you is a snapshot. So by the time I click off this video, the rate could be different, because rates do move in real time depending on what's going on in the financial markets. So they can move around some, but the trend for probably the past 3, 4, 5 weeks has been up every week, and the pricing has gotten a little bit worse. So this is kind of where we are right now. And I wanted to show you, this is what kind of a difference it makes in the monthly payment, all things being equal. These are payments for these loan amounts. Again, a $250 purchase, 20% down. This is including taxes and insurance, just an estimate of taxes and insurance. But here's the main difference. So you can see the difference in the rate, equal scenarios, is causing the monthly payment to be about $112 higher. So for that buyer that is maybe at the very top of the range that they can afford, this might make a difference. For your buyer clients who are really set on a specific payment amount, and the homes they're looking at are at the top of that payment amount range as well, this rise in interest rate could make a difference for them. Now, let me tell you a couple things here, because the picture is not necessarily bad, but I wanted to show you one other thing here. If we go back, this is a Freddie Mac website. You can see your 30-year fixed rate mortgages since 1971. Okay, so we ended in 2021, our 30 fixed average 2.96 with 0.7 in points. So without points, that's going to put you in the low threes. Same here, on 2020, that's going to put you in the, low to mid threes. If you go back to 2018, that was only 3 years ago. Look at the average rate for 2018, 4.54. So I guess and if you want to get, see some really ugly rates, go back a few years. Here's the early 2000s. Look at these average rates. If you go all the way back into the 90s, you're looking at 6, 7, 8% rates. So I guess the key thing here to remember for you and for your buyers is that these are still historically low rates. They have not been trending in a favorable direction. We don't know what the future holds. And like I say, when I click off this video, the rates could be different. It could be a whole different scenario. But just know, rates have gone up some. We'll see what happens. Hopefully this trend will moderate some. Maybe they'll level off. Maybe they'll even dip a little bit as the year goes on. I don't know. We'll have to see what happens, and especially what happens with inflation. But anyway, just for your knowledge, just wanted you to know that. If you have any specific questions for me, please feel free to reach out. I'm always glad to help. Have a great weekend. We'll see you soon.